what tools do we have available there? All right, from there, we're going to take it and go into the fixed income portion of the training. So how we're going to break this up is we're going to start by looking at corporate bonds, which we're going to look at. We're going to break down into market surveillance. We're going to talk about idea generation and universe creation. And then we're going to talk about single security analysis. And then we'll talk about some tools in the treasury markets and rate space. And then we'll end by talking about some asset class agnostic functions, some important stuff that anyone in the fixed income space, regardless of what you cover, could use. All right, so diving right into the corporate bond portion, again, we're going to start by talking about market surveillance. So there are really just a few functions here, tools here that we want to highlight. The first is a tool called FICM. So if I type that in, FICM is our fixed income credit monitor, and what you use this for is to get a broad overview of what's happening in the corporate bond market. So you'll see here you can choose whether you're looking at US dollar, euro, or GBP, and then you can also choose whether you're looking, what rating you're looking at, so investment grade, high yield, or emerging markets. So if we click into high yield, generally gives us a little bit more interesting numbers than investment grade. And we'll see down here we have some indices, you can look at the historical range, but really where we find people using FICM is this section right here. Because what it's doing is it's taking each sector, showing you the spread overall and then the spread for each sector as well. And you can see how much the spread has changed, how much the volume is traded over time. And then what you can do is actually click into the sector that you want to evaluate further. So let's say we want to look at financials and find out why their spread is up 2.8 basis points. So you can click into senior financials, and once it's loaded, it will show you all of the issuers that have bonds that are within this high yield senior financial space. So these are all the different issuers. You can see what the spread for the issuer is and how that's changed to kind of evaluate where the change is coming from. So we can see that this CBL and Associates, the spread is up 130 basis points. So let's say we want to click into this, and we see, okay, they have one bond. It's this 4.6% 2024 bond. Then that's the one, that's where the spread is up 130 basis points. But let's say there was an issuer that had multiple bonds here. I'm trying to find a good example here. Let's hope I can pull one up. Yeah, so for example, Geo Group, they have 4 bonds. So you'd be able to see all of them and how each of the individual spreads have changed. So the nice part about FICM is that it allows you to start with a broad universe of security. So it allows you to look at the whole corporate bond space, whether it be investment grade, high yield, or emerging markets. And then you can drill down into not just a specific sector, but a specific issuer and even individual bonds. So in that sense, it's a really good way to get a high-level overview of what's happening in the market. Similarly, we have a few tools that allow you to look at what's trading in the market, what are the actual trades that are happening. So the first one for that is a function called TACT, or Trace Activity. And this is just going to show you aggregate trades that have gone through Trace. So it's going to take all of the trades for an individual security, and the securities you see can be filtered up here, so you can use a list of securities, or you can change all of these filters so you're only looking at bonds that you care about. And then it's going to aggregate all of the trades over the period that you've selected. So we can see for this bond, there has been about 3.7 million face traded, over 77 trades, with a volume of 225 million. And an average price of 101.75. So it's a good way to get an understanding of what's actually trading in the markets that I care about. And this is trading specifically over Trace, so Trace prints that they send to us. Similarly, if we wanted to look at this, but for markets that aren't traded over Trace, let's say MiFID markets, for example, we can do that in a function called TAGG, or Trade Aggregation. And there, all we have to do is change our universe from Trace to MiFID. We can keep our asset classes the same. And now we're able to, in the same way, we're able to filter down to a specific list or a specific type of security. And we're able to then filter by looking, it should remind you of FICM a little bit. So we have the sector, we can click into consumer discretionary, we have the issuer, we can click into, say, Volkswagen, for example, and then we can see the individual securities that have traded. And if we click into these individual securities, we can even see the source over which they traded. So what MiFID post-trade source are we actually getting this data from, and how much is traded over each of these sources. And if you click into these, then you can actually see the individual trades themselves. So this is similar to TACC, but it's going to allow you to look at MiFID trades as well. And that's kind of what we wanted to show you in terms of market surveillance. These are 3 tools that you can use to get an understanding of what's happening in the broader corporate bond market before you dive down into a single security or a universe of securities. Which brings us to our next topic of universe creation and idea generation. So, like Barry showed you in terms of EQS and ETF, we also have search tools built in for fixed income securities. So for that, we would run SRCH. And SRCH is going to be our fixed income search tool. And much like EQS, what you can do is plug in a series of criteria. So you could say, I want the currency to be USD. I want, a yield. So let me type in the amber box here. I don't know why it's not letting me type there, so let's rerun it. So it says again, currency USD. We have a yield of, let's say, greater than 6%, and an amount outstanding of greater than, let's say, 500 million. So this is an example of the kind of search that you could build. You can use descriptive information, you can use pricing information, you can even search by holder information, really whatever you want to search for to build a universe of securities that you care about. And you'll see that we very quickly went from about 412,000 securities down to about 2,000 securities. And from here, if we click on results, we're able to see all the results, we can put them in a matrix, we can look at the holders of all of these, etc. However, where this function really becomes powerful is in this additional analysis options toolbar at the bottom. Because what this allows you to do is bring these results, these 2,136 securities, into other functions throughout the terminal. The main one that I want to highlight is this evaluate pricing FIW. If we click on this, that's going to bring our 2,000 plus securities into a function called Fixed Income Worksheet, or FIW. And what Fixed Income Worksheet is going to allow you to do, and I'll zoom in so you can all see it, what Fixed Income Worksheet is going to allow us to do is analyze this universe of securities even further. So you can load up SRCH results like we just did. You can also look at an index. You can look at a security list that you've already created. So don't think that you're limited to just SRCH, but SRCH is where we see a lot of people using this and finding a lot of value. So I'll go through what FIW can do. The first tab is split up into 3 tabs. And the first tab is going to be the matrix. This is just going to give you aggregate data for the universe. So you set the groupings up here. So this is grouped by rating and then maturity. And it's going to give you the average yield for each of these buckets. So you can get a good sense of what the aggregate data of the index. And so you can see, okay, so BB plus bonds with less than a year maturity in this universe are yielding an average of 5.26%. So it's going to give you aggregate data. If we click into the bond list tab, this is where we're going to be able to get data for each individual security. So it's going to give us things, we can see that there are different subtabs here, whether it be pricing, relative value, liquidity, etc. We'll click into those other ones in just a second. But if we stick on the pricing tab, what this is going to do is give us the price, spread, the yield for all of the securities within our universe. And what's nice about this tab is you have something called calc mode. So what that means is that if we click into calc mode, we can actually put in our own prices. So say we can change this to 100, and will actually calculate for us what the spread, yield, and ASW and all of these other columns are for that specific price. So rather than having to use the BNOT prices like it's giving you right now, or it gives you by default, you can actually plug in your own prices. Now, working through these other subtabs, we have the relative value subtab. This is going to give you, this is going to compare the bond to itself over time historically. And then we have the liquidity subtab. And what this is going to do is this is going to scrape through all of the pricing messages that you receive and show you the price, the yield, the spread, and the size, and even axes from all of those pricing messages. So if you receive quotes on this universe of securities, those quotes will populate here, and you can evaluate as a whole what the liquidity of these bonds looks like. Finally, we have the bond chart tab, and this is just going to give you a visual representation of your universe and also allow you to create curves. So if we change this from G-spread to, let's say, yield, and change the x-axis to maturity, so this is essentially going to allow us to create a yield curve. So let's say we want to only look at the triple Cs. So we can click into that. Now we're only seeing bonds that are rated triple C. And then if we click this graph icon, what it'll do is it'll actually create a regression for us and create for us a yield curve based on these securities. So this is a really good way. We can even add a curve, so say the U.S. Treasury actives curve. Now we can compare what the U.S. Treasury curve looks like compared to our triple C curve based on our universe. So it's a good way to do kind of comparisons. We'll also find outliers. Maybe we want to see why this has such a high yield, or maybe why this has such a low yield compared to the curve. So it's a good way to do analysis on the universe of securities visually. Great. Also, I want to take this time, I'm not sure if Barry mentioned it, but if you have any questions on anything we're covering today, we'll put up our emails at the end. Feel free to reach out to us via email or IB, and we'd be happy to set up some time, one-on-one or two-on-one as the case may be, if it's myself and Barry, to go through any questions you guys might have. So feel free to reach out to us after the fact, and we'd be happy to set up some time with you. All right. Moving on, we're going to move from looking at a number of different securities or looking at the market to looking at individual securities. So I have a Disney 7% bond loaded up right now. And what we're going to do is go through how we can evaluate this bond. So really there are two ways we want to look at this. We want to look at this from an issuer level, and we also want to look at this on an individual bond level. So we're going to start with issuer. How do I look at the issuer of this Disney bond? Well, we have a few tools that you can use to do this. The first is a tool called DDIS, and this is our debt distribution function. What this allows you to do is see where an issuer's debt lies over time. So we can see, for example, here that Disney has a lot of debt coming up between now and 2027, a little bit of debt starting in 2040, but not so much in the middle here. So it allows me to look at it as an analyst, maybe, if I'm investing in this debt, I'm a little bit less worried about them paying me back than I am if, I'm in these couple of years where there's a lot of debt here. So it's a good way to evaluate where does the debt for this issuer lie and how crowded is their debt distribution? Is it evenly distributed over time, or is there a lot of debt obligations coming up at a specific time? So that function is DDIS. Second tool that we want to look at is a function called CAST. Now, CAST is our capital structure tool. And what this allows you to do is, as the name says, see the cap stack for a specific company. So we can see where this lies in the corporate structure. You can see its parent companies, and you can see its child companies and subsidiaries as well. Additionally, it allows you to see all of the debt associated with a specific issuer. So we can see that this TWC Enterprises has 2 unsecured loans and 23 unsecured bonds, and we can actually see what all the bonds are, how much is outstanding, the price, the spread, the yields, etc. So it's another way to evaluate the the issuer itself and see where its debt lies. Now, the last function that I want to show everyone in terms of issuer analysis is a tool called NIA. Now, NIA is our new issue analytics tool, and the use of this is really twofold. One, it allows you to do issuer analysis. Now, this format should look pretty familiar to everyone because what it does is it uses the FIW framework, but it uses it on an issuer level. So rather than looking at an index or the results of an SRCH search, it actually looks at all of the bonds issued by whatever issuer you've loaded. So it's taking all the bonds from Disney and placing them on a chart, so you can see where where the bonds you're looking at falls within the yield curve and the rest of the bonds that issuer has issued. We also see a lot of DCM and syndication desks using this to understand potentially where a bond should be issued. So they look at the issuer, if they're looking to, say, put out a 15-year bond, we can see, okay, this is around the yield that would be expected given this issuer and that maturity. So this is a really good way to, if you're evaluating a specific bond, it's a good way to see where it falls within the issuer as a whole, but it's also a good way that if you're on the capital market side of things, a good way to evaluate a particular issuance. You can also, again, add curves, add comparable issuers, so it makes it easy to do that kind of comparison. All right. So we've now surveyed the market. We've, we've done our universe creation, idea generation. We've evaluated the issuer of a specific bond. So now we're going to talk about how do I analyze the bond itself. And there are a few tools that I want to show you how to do this. So the first one is DES. Now I believe Barry showed this with equities, but as you can see, the bond page is very different. Now every security is going to have one of these description pages, but again, the information, depending on what kind of security you're looking at, that's what's going to change. For a corporate bond, you'll see a lot of basic bond information, so the coupon, the frequency, the day count, the calc type, the first coupon date, but we also get a lot of deep information on this as well. So if we click into coupons, we can see, okay, that's a long first coupon. If we click into covenants, you can actually see the different covenants that are associated with this bond. You can see any regulatory and tax information, guarantors of the bond, ratings, etc. So there's a lot of good information here, and it will also link you to a number of different functions throughout the terminal. So you'll be able to see the pricing of this bond. You'll be able to click in and see the prospectus or the holders or things like that. So the DES page is always what I recommend. It's the first stop when you're looking at a bond because it's going to have all that good information. It's also even going to show you some stuff about the issuer as well. Not as much information as other functions, but this will give you a good overview. And I mean, there's still a lot of really good information here about the issuer. So that's the DES page. The next page I want to show you is the YAS page. YAS is our yield and spread calculator. And as the name sounds, what it allows you to do is input a settle date and input a price or a yield, and it will calculate, if you input a price, it will calculate the yield. If you input a yield, it will calculate the price. We'll also calculate the spread and different risk metrics as well. So, for example, let's say I wanted to settle next Wednesday for a price of $150. That will tell me that that's giving me a yield of about 2.12%, given this settle date and that price. If instead I wanted to see what the price would have to be to yield 3%, I can see that that would have to be a price of $138. And then what's nice about the screen is that using that settle date and that price or that yield, all of these other metrics are going to update. So we're able to see what the spreads, what the credit risk are, what the spreads are here. We're able to see what the interest rate risk is. We're able to look at duration and risk and convexity. And that's all based on the price or the yield and the settle date that you input here. So this is a really good way to get an understanding of what's given a specific price, what's my yield, and so on and so forth to do those calculations by hand. Now, the next tool that I want to show you for this is a function called FIHZ. So FIHZ is going to be our total return tool for fixed income securities. So what you do here is you put in an amount that you bought at settle. So you put in the settle date, settle price, settle yield, etc. You set a horizon, and then a horizon price or a horizon yield, and it will calculate what is your total return on this bond given a specific reinvestment rate. So am I reinvesting at the yield of the bond? Am I reinvesting at the repo rate? Depending on what my reinvestment rate is, it will calculate my total return, my holding period return, and even my net P&L. What's nice about this, if you click on Forward View Cash Flows, you can actually see where these calculations are coming from. So, everything at the settle date is going to be subtracted, everything at the horizon date is going to be added, and it's going to give you that total P&L and total return percentage at the end. You can even include tax rates as well if you'd like. So it's a really powerful tool to calculate returns, either historically, which is what you would see at the bottom here, or you can calculate it forward-looking, given your predictions on price, yields, the potential reinvestment rate, etc. Awesome. So from there, we're going to go into the Treasury and rates market a little bit. There are just a few tools that we want to show you there. The first of which is BTMM. So BTMM is our Treasury and Money Markets Monitor, and what this is going to do is for a single country show you all of the rates and money market tools that you need to understand what's happening in the rates market in this country. So you'll see for the U.S., we have T-bills, we have Treasury notes, we have deposit rates, repos, swaps, key rates, really anything that you could potentially need to understand the rates market in the U.S. and where it stands right now. And all of these will tick in real time, assuming that you have access to them in real time, which most of these come standard with the terminal. Now, if we go from the U.S. to China, for example, you'll see that these rates actually change. So based on the country you're looking at, the rates that you would need to evaluate the rates market there are going to be different, and this screen takes them into account. So if we're evaluating China, these are the rates that our team has decided are the important rates for China. Now, BTMM is really great for looking at one country, but if you want to compare cross countries, we do have a tool for that as well, and that tool is WB. Now, WB is our World Bond Markets tool, and what this is going to do is for a specific region, which you can control up here. Right now I'm looking at the Eurozone, and a specific tenor. So right now we're looking at the 10-year bond, but we can look at the 2-year, the 5-year, and 30-year. You can actually compare the yield and the price across the region for that specific tenor. So we're looking at the Eurozone 10-year, so we're comparing the German 10-year to the Italian 10-year and the Greek 10-year and the Spanish 10-year, and you can see where the yield is across the region. You can also, in here, see it compared to itself. So it's going to show you not just how it compares to its region, but where it is compared to its average over whatever date range you've chosen. So right now, we can kind of see every country in the Eurozone, the 10-year rate, apart from Germany, is yielding lower than it was yielding 3 months, then yielding lower than the average over the last 3 months, apart from Germany up here. So this is a good way to compare across a region or across a particular set of countries or a specific tenor. It allows you to compare there. Now, let's say you wanted to look at the whole curve rather than one tenor at a time. We do have a function where you can do that, and that's CRVF. CRVF is our curve finder tool. So what that means is that this is where you're going to be able to find every yield curve that Bloomberg has created on the terminal. So you can see we have country yield curves, credit yield curves, so based on particular sectors and credit ratings. We have muni curves, we have FX curves, but we'll stick with country for right now. So you can click into a specific country, say France, choose their curve. We can then let's say we want to compare that against the German curve. We can do that as well. And then we just hit graph selected curves. And it will bring us to our GC function where we can look at the current values or we can look at historical values as well. And again, you can choose as many or as few curves as you want to bring into GC. Now, let's say you're looking through CRBF and there's not the specific curve you're looking for, or you want to build a custom curve, we can do that as well. And the way to do that is CRV. Now in CRV, you can choose any type of curve. So a fitted curve will regress a line, a linked securities. That's just going to link all of the securities you've chosen back to back. We have benchmark curves, build your own curve. So you can select one of these curves, you plug in your securities, and it will create the curve for you. You can then save them and access them later in this My Curve section here. So if CRBF doesn't have something that you're looking for, you can build out a curve here. And that's not just treasuries, but that's corporate bonds, munis, so on and so forth. The last tool that I wanted to show you before we finish up here is a tool called AllQ. Now, AllQ is going to be where you can see all of the pricing that you're enabled for contributed to the terminal. So you're able to see the prices, the spreads, and the yields contributed by various dealers that you're enabled for here. So you can get a sense of where the market is for a specific security, even if you're not necessarily receiving quotes directly. So AllQ is going to be the place where you can evaluate that. Cool. With that, we'll end. I want to give you guys 5 minutes back at the end. If you have any questions, please feel free to reach out to Barry or myself and let us know. These are our emails right here. Feel free to shoot us an email, shoot us an IB, and we'll be happy to help with whatever we can. Otherwise, thank you for attending the Intro to Fixed Income and Equity webinar. And this will be happening again next week, and feel free to check out all of the webinars that we have available on the function SMNR. Thanks for joining, everyone. Have a good one.
The leader has disconnected. The conference will be terminated in 5 minutes.